Hi there, Robert Wolf here with Terra Firma Business and Financial Consultants, and the CEO and founder, an asset coach and a tax strategist. Thanks for joining us here. Feel free to subscribe down below and go ahead and hit the little gray bell so when we update other videos and such, you get notified as well. And after reading this article, if you like it, go ahead and give us a thumbs up. That's very helpful for us. And go ahead and feel free to add some comments as well. We just love to hear back and feedback from our subscribers. So today's video is an article that came out on Yahoo Finance by ProPublica, and it's talking about LeBron James taxes in 2018 versus Steve Ballmer's taxes, who's the owner of the Clippers. And there's a lot of misinformation in here, and you can just tell how the tone of the article is. And I just wanted for us business owners to step out, talk about the language that's being used, and add some clarification here, because what I feel is being said and communicated is inaccurate and actually trying to cause more ruckus, so to speak, than anything else other than just giving information. So I'm going to go ahead and share my screen here. We're going to take a look at the article here. I've highlighted some areas, but let's go ahead and go through that and see what we're chatting about. Okay, so here is LeBron James. 2018 federal tax rate was triple that of Los Angeles Clippers owner, billionaire owner, right? They want to clarify that. This just came out in yesterday, in fact, July 8th. LeBron James had a vastly higher tax rate than Los Angeles Clippers owner Steve Ballmer. According to the investigation released Thursday by ProPublica, James's tax rate in 2018 income was nearly triple that of Ballmer's tax, despite a 19% of what Balmer made that same year. James reported $124 million in income 3 years ago and paid a federal tax rate of 35.9%. Balmer, former Microsoft CEO, told the IRS that he made $656 million and he paid $78 million. Okay, so Balmer paid MoMA about 60% of LeBron James' income in taxes. He paid $78 million in federal taxes, a rate of 12%. Who cares about the percentage? He's paid $78 million. LeBron James made $124 million. This is federal rates, okay? Both live in the state of California. Add state taxes to that as well, okay? So he paid $78 million in taxes. All right. So meanwhile, James paid over 44 million taxes on reported income that was 532 million less than Balmer. So James paid over 44 million. Balmer paid more taxes than James. But how much more? Well, try like what? $34 million more. Okay? That's 25% of LeBron James's income. Okay? So why are we talking about percentages? $78 million and $44 million is a lot of money. How many regular average Joe taxpayers, W-2 taxpayers, does it take to pay this much in taxes? How many is that? Right? Talking about 1,000, 3,000, 5, 10,000, right? What are we talking about here? Okay, this is ridiculous, the tone that's coming across. How did Balmer get away with paying far less in taxes relative to James? He didn't get away with anything. And we'll talk about that in a second. An accounting trick that many other professional sport owners use. It's not an accounting trick. The IRS does not create tax rules. Congress doesn't pass tax rules that are tricks. It's out there in the open. It's online. Go look up the tax code. It's right there. There's a major difference between James and Balmer. And you'll see that as we go through here. Balmer pays such a low rate in part because of a provision of the U.S. tax code. Not a provision, because of the tax code. When someone buys a business, they're often able to deduct almost the entire sale price against their income during the ensuing year. That allows them to pay less in taxes. Yeah, that sounds about right. The underlying logic is that the purchase price was composed of assets, which is what? Buildings, equipment, patents, and more. Yeah. Assets create income. That income does what? Hires employees, which LeBron James is an employee, right? That degrades over time and should be accounted as expenses. We call it depreciation. That's what the IRS calls it, depreciation. Depreciation, okay? It's part of the tax code. Real estate does the same thing. Business does the same thing. It's not a loophole. It's not a scheme. It's not a trick. It's a reality. Why? Because when somebody spends $2 billion in buying a business like Balmer did, there are certain aspects that depreciate. They deteriorate the building. If Balmer didn't upkeep the building, what would happen to the building? It'd fall apart. That's depreciation. That's an expense. Okay. That's what they're talking about here. Okay. Owning a major professional sports franchise in the US is an incredibly lucrative business. Duh. We know all that stuff. Let's skip to this part here. In 2014, a record price. He paid, now Balmer in 2014 paid $2 billion for this franchise. Most people said that was $1 billion overpriced. So he paid an extra $1 billion for the Clippers, who historically had not been a very successful team. Since he's purchased it, they've been winning. Why? Because he's putting money into it. Shouldn't he get a reward and a return for that based on that risk and that extra investment? Absolutely. Balmer has been able to decrease his tax rate because of that high purchase price and the fact that the Clippers have reported operating losses. Just like any other business, you're allowed to do that. But IRS records obtained by ProPublica shows the Clippers have reported $700 million in losses from 2014 to 2018. Yeah. What are losses? You have revenue, expenses equals profit or losses. So if he's investing money into this business by hiring employees, players, athletes that may be more expensive than other players and athletes that they had before, isn't that an expense? Yes. Income is an expense of a business. Hiring people is an expense. Even if they're independent contractors, it's an expense of doing business. Not only does Balmer not have to pay taxes on any real world Clippers profits, I love that. I love that. He can use the tax write-off to offset other income. Absolutely. That's how the tax returns work. You can have multiple assets, multiple business. Each business files their own tax return. And at the end of the day, if there's profit or loss on that business tax return, it flows to who? The taxpayer. Who's the taxpayer? Steve Balmer. And that's called the 1040 tax form. Very, very simple. So let's move on, because they're talking about other things. And now they talk about in 2004, when they created this, someone who purchases a team or a business or a asset is able to write off a whole host of things involved in the operations of the team. Key here, operations of the team. The IRS code in section 162 says you can deduct all ordinary and necessary expenses to run or manage your trade or business. That includes player contracts. Income is an expense to the business. Duh. It's a cost of doing business. Just if I were to build a widget, if I'm going to build, let's say, this water bottle, okay, I have to buy the material. There's a cost to that. I just don't create this material. I have to go to another company, buy the material. Then I have to buy the machinery to make the bottle. There's a cost with that. Then I have to get the water, which probably has a fee to it, to put the water in the bottle to block it up. And then what do I have to do? I have to box it up. I have to ship it out to and then it gets sold. That's the process. This is no different. What's their widget? The basketball team, winning and losing, players on the field. Those are the assets. Those are the machines working their tail off, sacrificing blood, sweat, and tears. Yes, but everybody does. If Balmer didn't do that decades before that, he never would have had the $2 billion to buy it. We know who the owner was previous to Balmer, and we heard nothing but issues with him. Right? So you can keep going down, but that the bottom part of this, one of the things that's kind of funny is that big reason why public opinion favors closing tax loopholes. It's not a tax loophole here, by the way. Similar to the ones that Balmer and other professional team owners use. Key here is owners, right? Owners use to pay less in taxes. According to April Yahoo News YouGov survey, 65% Americans want loopholes closed that allow corporations to put their money in offshore banks, while 15% want to keep those loopholes. Okay, where in this money offshore banks, where does this come from? This has nothing to do with the conversation of the article, right? Now, let's take a look at this. Here's what I want to do. Let's go to the Clippers website and let's take a look at their full-time staff. How many people do they employ? Okay, it's a business, right? And that business employs people, and those people have tasks to do, don't they? And they get paid a salary to do that, don't they? And those people agree to that salary, don't they? Okay, so it's a willful connection, contract, obligation by both parties. The Clippers, Steve Ballmer, and the employee both agree to what? A hire relationship, employee-employer relationship, and there's a dollar associated with that. It's called salary, income, right? Both parties agree to it. All right, let's take a look at this. Let's go to their website. This is from the NBA's website. Okay, Clippers, you can see the little Clipper logo here. Okay, LA Clippers staff directory. Okay, so you have Steve Ballmer, the chairman. You have Dennis Wong. Now, basketball operations. Okay, what's basketball operations? Well, basketball operations is what? The coach, general manager, assistant general managers, consultants, executive directors. I'm not going to list out everybody, but take a look at this. Let's scroll down here. Okay, basketball operations. They all earn a salary, and we can look up Lawrence Frank's salary. We can look up the general manager's salary. Okay, the consultants, team operations. Okay, now let's go to coaching. Okay, so the head coach now is Tyronn Lue. Before it was Frank. Okay, so you have the assistant coach. You can look up all these salaries. Okay, okay, look at this. 1, 2, 3, 4, 5, 6, 7 assistant coaches. Okay, that I know off the top of my head. Ex-professional player. Ex-professional player. Okay, ex-professional player. Okay, so they all earned salaries and contracts by playing. Okay, now scouting. Look at the scouting. Basketball research and analytics. Performance, health, and wellness. Okay, so these players, look at all the support staff to keep these guys healthy. 1, 2, 3, 4 doctors. 5 doctors on staff. Okay, video. Business operations, communications, marketing department. Look at this marketing department. Media. All these people earn a salary, right? Communication, corporate partners. Let's see here. Legal, finance department, technology, human resources. Yeah, by the way, human resources, employees, right? Let's keep everybody doing well. Okay, business strategies, sales and service, so people go see the games. Youth basketball. Oh my goodness, how mean of Steve Ballmer to have youth basketball program. That's horrible. What a monger. Look at this. There's all the full-time staff. We're not including all the other, who's the other staff? People at their arena, the parking attendants, right? The guys who work security out in the parking lot, the vendors, right? How about all the businesses around where the Clippers play? How about their practice facilities? How about all the hotels that when they go to different cities to play, how about all those employees at the hotels? There's cost to doing all that. So what are we talking about loopholes? We're not. This is divisive journaling to create an angry energy to what? If these things were not deducted from revenue, if these expenses were not allowed to be deducted from revenue, what would happen? If you increase tax rates on all this stuff, what happens? There's less cash in a business. If there's less cash, what happens? There's less employees. So a lot of these people won't have jobs. You look at all that. And at some point, a business can't run anymore if they don't have employees and revenue. You just got to shut the doors. And then how many people are out of jobs? So this is very frustrating to me, and this seems to be the ongoing journalistic rhetoric that's going out there to pin employees against business owners. And I think it's wrong. I think it's wrong because there's a lot of blood and sacrifice on both sides. Together, we create a product that people want to see and use. Those are called fans, customers, clients. And that's what should be focused on. How do we improve our product, our service to help our fans, our clients, our customers to have a better experience, a better service, a better product? That's where the focus should be on. Okay? $78 million in taxes Balmer paid. LeBron still paid 44 million taxes. Yeah, that was a large percentage. But at the end of the day, it sounds like maybe LeBron needs to hire some tax people to help him understand how the tax code can reduce that tax liability. Just a thought. So thanks so much. If you like this, again, thumbs up down there, add a comment to it. Go ahead and subscribe if you haven't already subscribed. And this is, we'll be adding these types of commentaries to different things that are out there. Go ahead and take a look at some of our other comments and articles that have come out. We're also going to add some thoughts and ideas and some material that we use to help our clients and our business owners succeed and have a better result in their business and their cash flow. So once again, my name is Robert Wolf. I'm with Terra Firma Business and Financial Consultants, and you make it a great day. Bye-bye.